Hello, konnichiwa, ihao. Today we are going to be talking about something that is on your mind, negative interest rates, because I think that this is a great and important issue that's occurring. Right now, the futures with regard to interest rates in the United States show that that as you go further and further into the future, you're seeing that there's an expectation that there will be negative interest rates. So first of all, I should talk about what are negative interest rates. Negative interest rates happen when you actually, as a depositor, will actually owe the bank money. In other words, when you're letting the bank hold your money, you will be the one paying the interest rate to the bank instead of just the borrower. Now, interest rates are a relatively new concept. In 5,000 years of history of interest rates, they have never gone negative until today. So you might say, whoa, what the heck happened? Why are we going for negative interest rates at this point in time in history? There's a reason why. Since 2008, the governments around the world have gone on a spending binge. They've spent more money than they could ever hope to achieve in revenues. They're not going to be able to raise the taxes to cover that, so they had to pay for it through borrowing. So how do you pay for all that? Well, for one thing, you lower interest rates to zero, which they all have done for a very long period of time. And now we're going negative. We're going negative interest rates.
Well, Michael talked about negative interest rates and how the Fed doesn't want to do negative interest rates, but they're kind of forced in the position where they have to do it, unless the other alternative is they can launch another bazooka of QE. And then if they do that, that would help to offset some of the demand for the negative interest rates.
Are you meant to cover yourself?
So that the stock market won't crash because they have the QE going at the same time. You either need a lot of QE or negative interest rates at some point in the future in order to offset possible stock market crash.
Now, you might be saying, well, who the heck is going to give the money to the government at negative interest rates? And the truth is that it's not the most simple question to ask, because there are a lot of people who actually would want to do that. For one thing, if you're sitting on $10 billion, maybe you don't want all of the money to go into the stock market. That's a reasonable view. So you have to park it somewhere, and you can't park it in the bank because that might be more money than some banks have. And if something happens to the bank, you definitely don't want to be the bag holder for the bank. So one thing that's considered risk-free is to buy treasuries in the US or buying central bank notes in other countries. So that's a reasonable point of view. Another point of view is some people, maybe big institutions, they might be required to keep their money, a portion of their investments with the central banks, and as a result they're going to get a negative interest rate. Now, the other reason why someone might still be willing to hold this is that even though they're guaranteed in some cases to lose almost like 1% per year on top of the inflation risk, they might still consider it a pretty good investment, considering two things. If interest rates go even further negative, then these government bonds will actually go up in value. So if it gets even worse and they push interest rates even more negative, then the bonds will go up. There's also the secondary issue that it's possible that people just might think that's the best investment you can have. In other words, even if it goes down to 1% per year, that might be better than what some people think the stock market will do 10 years from now. So if you have a very bearish view, you'll say, I don't mind losing 1% per year because I think markets will decline 60 to 80% or maybe 90%. That would have to be a view of some of the large institutions that are letting the government have this money to borrow. Now, as far as small investors, you might be thinking, you at home, you might have 10,000 and you don't want to pay a negative interest. You don't want to have to pay an interest rate to the bank for holding that. And it really depends on the country how this is resolved. And in Switzerland, they're only making people pay the negative interest rate if they have over $1 million in the bank. Now, if you're not in that category, you still will not get any interest. You'll be at 0% interest. And in Japan, what they're doing is it's not really possible for the bank to just handle negative interest rates so well. So what they're doing is just instead of making you pay the bank, they're just making a lot of people pay monthly fees in order to have banking services. Now, of course, that's pretty unpopular in Japan because it's a nation of savers, but still people do have to pay a monthly fee in order to have a bank account in Japan due to the negative interest rates. So you might think this is a crazy time period where you may have to pay the bank for the privilege of holding your money and letting other people borrow. In fact, you could tell that this is not a great time period for banks, though. Even though you might think, oh, this is so great for the banks, they're getting free money, they're getting paid to hold it. Well, the truth is, if you look at bank stocks, they're doing pretty terribly. Some of them are down like 50 to maybe 55%. So the banks are definitely showing no indication that they're doing well. I actually think you have to almost think outside the box what's going to happen with regard to this, because I don't think people are going to accept negative interest rates just lying down. Like in Japan, I heard that some people have taken money out of the bank and put it into safe deposit accounts, boxes, and of course that costs money too to have some kind of storage, because it works the same way with gold. If you decide, hey, I don't like the dollar, I want gold, well, you have to pay in order to have the gold stored. So it's the same issue with the dollar. Another thing is, this might be the catalyst that causes Bitcoin to explode to the moon too, for all I know. I'm not saying it's going to happen. I'm just saying that it's possible, and you should never believe someone on the internet anyway, because we just say whatever is on the top of our head. It's not necessarily based on anything. But if you think about it, because the dollar will indeed go down in value if interest rates go to negative, because that's really what causes the differences in value in currency. If the interest rates are going up in that currency, it tends to actually be worth more. Whereas when the interest rates are going down, that currency's becoming less and less valuable. Now, there is a political component too, because central banks are influenced by the elected officials, and President Trump did say he wanted negative interest rates. And you might say, well, why does he want that? Well, part of that is because since other countries are doing negative interest rates, he feels as though the U.S. has a competitive disadvantage as a result. Oh, he doesn't like negative interest rates. What do you think of negative interest rates? He's gonna get the other dogs. They're all gonna come. I'm always afraid of them. Well, that's what we know about negative interest rates. So, negative interest rates, the reason why President Trump supports the negative interest rates is because he feels that domestic companies are not really able to compete fairly around the world if other countries have a negative interest rate, because it means that their currency is a lot cheaper. It means that they're able to compete a lot easier than Americans because our currency is more powerful. Although I have to second that, if making your currency worthless was a trick to economic prosperity, then Cuba and Venezuela should be doing extremely well, because their currencies are also quite worthless. So it's not a great path long term to try to do everything in your power to lower the value of your currency. I mean, in China, people are trying to take as much of their money out of their economy too. So you create dislocations, you create problems when you are devaluing the currency. So I think negative interest rates are probably going to the funny thing is, the central banks said, hey, no, we're not going to do negative interest rates, because I think they know a lot of people have their money in savings and don't like the idea that they will have to pay that. It's like a tax on savings, and if you tax savings, you're going to get less of it, and the economy will do a lot poorer long term, because how else do you have the savings in order to pay for more productive investments over the long run? It is not possible unless you are having a savings economy. So I think you need to be need to be somewhat worried about negative interest rates. Possibly if you have below $1 million, it probably will not make much of a difference. Possibly if we follow the Switzerland example, because it seems as though they're just having 0% rate. They're not making people pay the bank. So that's it for today on our update. I look forward to seeing you in another video. You have to smash the like button if you don't want negative interest rate, or if you do, you still have to smash the like button and subscribe and hit that bell notification. See ya.